Hi, good evening. Today is August 17th, Tuesday. Yesterday, we had really weak Chinese data overnight, as well as lots of Delta concerns weighed on the markets, and we had a sell-off overnight from Sunday night and into the Monday morning open. Plus, the utter chaos in Afghanistan obviously didn't help to boost confidence in US. But for once, I agree with Biden that if Afghani army doesn't want to fight for their own country and they just surrender and give up and join the Taliban, who are we to fight their battles? So I think he's obviously right in withdrawing from Afghanistan, but at the same time, the way he did it is obviously a botched withdrawal. But so the markets on Monday night and Monday morning were not too happy about the events, but the buyers came in and bought S&P and brought it back to unchanged and also to all new time highs. It was an amazing rally since 10:30. It was no mercy to shorts. There was not a single half an hour close that closed negative. It was green closes for every half an hour candle since the 10:30 till all the way after the close. And this was a 40-point rally with completely, like I said, no pullbacks. And we made new all-time highs at 44.76, exceeding the previous all-time highs by around 13 points. So that's just one of the great examples of deception, as well as the difficulty shorting this market. And after that amazing rally yesterday, everybody was bullied up and ready for 4,500. But of course, today we sold off yet again and broke yesterday's low and all the way to 44.1175 level. We talked about the pullback to 44.10 or so level last time on Friday, because it was a very reasonable expectation, but it's not, like I said, it's not an easy thing to trade given the rally yesterday, 40 points in a straight line. But today we tested that 44.11 level again, and this is also the level where the vol trigger is currently at. So I would say it's a very important level to pay attention to. If we break below that level, the sell-off will continue, and we're likely to retest or test rather the 43.50 level. We also yesterday traded over 100% of the pandemic lows. So I think we are currently at a very significant level being tested. And so not to get overly bearish, but I think the best times are behind us. And so we're likely to trade, even if we made nominal highs, I think we're likely to trade more in a range slightly, at least for the rest of the month of August and into the September. Today, we had industrial production that came in and it was rather positive. It almost doubled the expectations. But at the same time, it was the 5th straight month of increases and 13 out of the 15 months. So all the stimulus was positive for the economy, but like we talked about on Friday, it seems that the consumer is tapped out and the stimulus is spent. There is the last vestiges of stimulus via the child's tax credit that is still percolating through the economy, but most of the consumers, like we discussed, are very pessimistic about the economy going forward. And this was shown in today's release of the US retail sales, which fell 1.1% month over month, much worse than the 0.3 drop expected. And so, like I was saying on Friday, that negative retail sales could propel the market down. And so it kind of worked out this way. And we got lucky. But at the same time, we also had home builder sentiment came in negative as well, as people are not too eager to buy homes at this price levels. And home builders are a little bit squeezed between the increasing in cost in materials but mostly labor, because some of the material costs have dropped, like lumber, 70% from the highs. But the labor costs are still increasing, and it's very hard to find qualified people.
So it's I think it's interesting to see that, for example, the that we saw a pullback today in bonds as well as in stocks. It was they were more or less flat. I wouldn't say it was a pullback, but there wasn't any rally, and I think that on these pullbacks, up until through July, we were seeing some rallies in bonds, which is fairly typical behavior, but we've only seen really pullbacks and a little bit of weakness, despite some strength in the dollar. And so I think that's interesting. There's something going on, and I'm not going to make predictions, but even though the dollar was up pretty nicely today, up 0.5%, and bonds didn't rally. So it's some of this behavior. There's something going on here that's worth paying attention to.
Indeed, and so the fear of lockdown and virus still continues. For example, New Zealand just locked down the whole country because they had one COVID case. Obviously, they looked at Australia and saw how great that worked. Well, it didn't. For people who don't follow the Australian numbers, they have almost as many cases now as they had a year before, despite all of the vaccinations and severe lockdowns. So New Zealand follows the lesson, and now they are in lockdown. We also have mask mandates extended in US for travel through mid-January. And so we even have the emergency in order in Palm Beach County, which is Florida, which is supposed to be more or less free and stable. So it seems like the mask mandates escalate. And so the market's obviously still concerned about that, in addition to the consumer. And Nasdaq sold off over 1% today. We talked about Nasdaq and saying that 14,000 is still a possible target for this pullback. We only had one negative day in a row so far for ES. And so we haven't had 2 days sell-off in a while. So I wouldn't be surprised if the sell-off continues tomorrow. Although we could even test 44.50 overnight, but in depending how that plays out, like I said, 43.50, if the 44.50 level doesn't hold, then 43.50 is the next level. Everybody was looking for 4,500 to sell or to close their position, but I think it's just too much of a convenient round number. But at the same time, if we look at the statistics, S&P 500 was 5 days up in a row before today. And historically, that has been a very, very bullish situation. In the last 5 years, out of 26 times that happened, only one closed lower in the next 5 days. All of them closed high in the next 5 days. There was only one failure. And so it's hard to say for me, because statistically it seems like a very significant number. So, but which statistical data we look at, because there's conflicting data, right? So August is also the 10th consecutive calendar month with new all-time highs for S&P 500. And the only time it happened in history since 1960 was 3 times. So clearly it's very rare. So will September make new all-time highs? Possible, but extremely unlikely. And the last 3 times that we had 10 consecutive calendar months with new all-time highs were April of 2014, November of 95, and August of 86. So like I said, a rare occurrence.
Well, and this is a chart of the SPX back in 1995, or showing 1995. that really there was a rally that started in September, October in '94, and it really continued through the end of the year. And it was nearly every week up. About 80% of the weeks were up weeks in 1995. So it was. But the thing I would say is and we were talking about this, are economic conditions the same, that there was maybe a little fear of inflation and the Fed was raising, but the Fed didn't have any problem raising, and it was taking rates up to 4 or 5% on the Fed funds rate on the short end, and they didn't have any problem responding to perception of inflation. And then there were on the deflationary side, there was the launch of things like Netscape, which just in 1994, AOL made a lot of internet available to a lot of people, but Netscape launched in '95 or IPO'd in 1995, and really brought the internet to a lot of people that hadn't used it much prior to that time, and it was really a remarkable time. I think Amazon launched either '95 or '96, so it was just a time of a lot of technological innovation, or at least a perception of it.
Right, I agree. 1995 is a great comparison because this S&P 500 has made 43 new all-time highs here today. And this is on pace for the best year since 1995. 1995 had 77 all-time highs. And so basically one new all-time high every 3.5 days in that scenario. And so, like you said, even though the rates were being raised multiple times in 1995, the market kept going up with no pullbacks and significant pullbacks, and it was up over 30% year over year in 1995. So it's interesting how people are saying that, well, if the Fed raises rates, the market is going to sell off. Well, if we look at 1995, the Fed, like you said, has raised rates many times, Greenspan did, and the market kept going up and it didn't care.
Or it was going up because the Fed was raising. The Fed, it was perceived that the Fed was on top of things, and that it would prevent inflation from really taking hold. And but there's this is what people used to say was 3 steps and a stumble, right? That 3 steps up and that 3 raises by the Fed, and then the market tends to sell off. And I think that was true up until financial crisis in 2008, 2007, and the Fed stopped raising or raising very much. They did raise maybe quarter, half a point, or maybe got to a full point here a few years ago, but then quickly cut in COVID times, right? So.
Right, but the rates were still pretty high in 1995. They were 8%, I think, if my data is correct, around 8% on 10-year Treasury bonds. I mean, I wasn't here at the time, so I don't really remember what happened, but it seems 8% seems so insanely high to where we're at right now that I can't even imagine if we have 8% rates right now, what would happen to the market.
Right, and that was actually perceived as being, by some people, too low. That the Fed should be more hawkish, and that we were starting to see a little inflation and so on.
Alan Greenspan raised rates 6 times in 1994 before the rally, even.
Right, right, and '94 was kind of a bearish year, both in bonds and in stocks, and so '94 was, it was a very unfriendly year in stocks. And although the index didn't move down a lot, it really killed a lot of the tech stocks and some of these more volatile parts of the market. Whereas '95 was just the reverse. It was everything speculative was going on.
Right. So the theory is that because Fed raised rates so much, everybody abandoned bonds and went into stocks.
Right.
So that was the theory for 1995, if I understand it correctly.
Yeah. Yeah, it was. I think it was a very different time. It was just there was a perception that I think, and the other thing that happened in '95 was what was then called welfare reform, which was a conversion of a lot of the welfare programs like SNAP and WIC and so on to
Right.
a kind of workfare. And it was, as Bill Clinton said in '95, in the era of big government is over. And imagine a president saying that now, Democrat or Republican, the era of the government is over. It was in many ways an kind of an opposite of 2021. Just the appetite for more government was pretty small. The Republicans had taken Congress for the first time in something like 40 years. And there were some pretty serious cuts to things. There were some government shutdowns in 1995. I mean, it was a very different, a different world. And
also NAFTA was in 1994. So people were concerned that the jobs will be lost, but that didn't stop the market either.
NAFTA, right? Well, the other thing that happened in '94 was GATT, which was an even bigger deal, I think. And we gave China most favored nation trading status in '94, and that for good or ill. and all the, a lot of things happened in '94 that kind of set things up for a huge rally, whether or not that lasted several years, whether or not that was justified. It did sell off in the early 2000s, but it was there was a very big technological change happening. When I just personal anecdote, when I first got out of school in '94, and I stayed in graduate school because the economy was not good in 1991, and so I finally got out of school in '94, and there were still people in 1994 when at my first job that they didn't even have a computer on their desk. They had a typewriter on their desk or something like that. And it seems odd, like, well, what kind of work are you going to do without a computer? But people did. I mean, there was still, it was like at the very tail end of a time when there were people that, whatever, in like a clerical job or something, they didn't need a computer. And so, but then it was just over that next 3-4 years, everything changed in the economy. And it became impossible to do anything without technology in a workplace, even for your non-technical workplace.
Right. So like, yeah, I agree. Like you said, it's a totally different time in the sense that in 1995, the internet boom was just beginning. It was such a invention, the internet, that has revolutionized everything in our lives to this day. So what do we have right now that justifies this kind of situation and rally? Can we have the same thing and rally since 1995 for the next 5 years?
Well, we've had, what I would say is the internet of money, which is cryptocurrency. That's a financial innovation. Whether or not, I don't think that regulators see it and have quite the benign view toward it as they did the internet. The big thing that happened in '96 was the Telecom Act, which was very favorable to technology companies building for the internet. Will there be something down the line for financial innovation, fintech, that might be brought into just cryptocurrency, but other things? I don't know. right now, under this current administration, I'd say probably not. It's not one of their priorities.
Right, but crypto is not really represented in the stock market. Even though it's an innovation, it's kind of on the side, outside of the stock market as of right now, mostly, by and large. There are a few companies, but not even as remotely close as the internet, where, as you said, no company had computers pretty much, very few, mainframe only, but not PCs as much as in the internet.
Yeah, I think that, part of the reason for that is that it was due to an alliance and an alignment of interests between Silicon Valley and Wall Street in the mid to late 90s to do one IPO after another. And these companies, that's how they raise capital. They raise at what seemed like a ton of money at the time. Now it would be nothing. When companies go public, the like Robinhood going public and instantly being a massive company, right? Let me get the market cap exactly, but they're $39 billion company, which would have put them in the top 50 of companies back in 1995, right? I mean, they would have been a huge company, 39 billion. But that's not even viewed as very big anymore. It's like a mid cap maybe. What cryptocurrency though? It's an alternative funding mechanism, and that was one of the first uses, was things like ICOs and so on. But there are all these fair launches, different kind of philosophy toward capitalizing companies and projects. And so in a way, it's a challenge to that Silicon Valley Wall Street model that was very successful back in the 90s and led to a lot of hot stocks and so on. So it's in a way, it's competing with the market, the stock market. And it'll integrate over time, but I don't think it'll ever be, it won't be like the 90s. There's not the impetus, and there's not that alignment of interests, I don't think, anymore.
It's another interesting statistic that I saw from Lance Roberts is that according to his data, obviously I don't have data going back so much that far back, since 1871, there have only been 12 occurrences of 6 months or greater stretches of positive returns before negative months appeared. So after 6 months, it's likely that the next month is going to have some negative return. And most of those occurrences had deeper corrections than just slight correction, but some were slight corrections. So even though, like I said, the 5-day statistic seems positive for the next week or so, overall, I don't think we're done with this pullback for the months of August and September.
Well, we've had these pullbacks, and they've all been just down to the 50-day moving average, and we're still well above the 50-day moving average. It's right around 43.50, which is the level that you talked about. But we haven't touched the 200-day moving average since whatever it was, May of last year, and it's probably due for that type of one order greater than these minor pullbacks that we've had all the way up, and it's probably due for a pullback that would be a bit greater, like down to the 3,900 level even. I could see that because I think the pullback that we had today, or started to see yesterday, and then today was it's like due to a loss of confidence. It was like a confidence sell-off. Like the perception that the United States sort of stumbled on the world stage in Afghanistan, the way that we pulled out and people falling off the plane and things like that, and just gruesome scenes, and and that's just what people were able to film.
And also the president's reaction, he really did not look in a bright light in all that situation. He didn't seem sharp, fresh, didn't take questions, only read the prepared remarks. And at the end of the teleprompter, after his prepared remarks, it said, "Leave now." Somebody caught on camera. So, and also he looks a little dazed and confused and not on top of things. So if God forbid something else, he stumbles, how's that gonna help the confidence? And Kamala Harris is nowhere to be seen or found. And it's hard. I don't even understand who is running this whole withdrawal from Afghanistan. It seems like nobody is.
Well, it's just that supposedly there had been a withdrawal deal worked out between the Trump administration and Taliban, because Trump wanted to pull out, but it was like a negotiation, like, well, we'll pull out in stages, and we're not just going to leave a bunch of tanks behind and things like that.
Right.
And which is what we're doing. We're like leaving all of these drones and tanks
and we're going to bomb a whole bunch of our expensive equipment in Afghanistan because we can't take it back. So
right, and we spent $700 million on the embassy, and just handing it over, and there's no no attempt to like save a little bit of money here and there for the taxpayers, right?
And of course, our priorities were always in the wrong. Instead of trying to build a stable country in Afghanistan, we were promoting LGBTQ and women's rights. Sure, this is all fun and great, but the country is clearly not ready for basic democracy, never mind women's rights and LGBTQ. Let's provide them with basic infrastructure, food, and normal governing structure before we start advancing the human rights to that extent.
It was announced by the U.S. government just a few weeks ago that the military, U.S. Army announced this very proudly, that Kabul University had initiated a gender studies program. And this is in a fundamentalist Islamic country.
Well, this is U.S. foreign policy. They take moderate Islamic countries and turn them into a desert, like Libya, Iran, and depose the moderate leaders. And then in Afghanistan, they bring back the strict Islamic rule. The American foreign policy has been so incoherent that it's just beyond.
Yeah, it's a very disappointing kind of utopianism, I think, on the part of some of these. It's Democrat kind of neoliberals, and well, they used to be Republicans. I think they left the Republican Party, but these neoconservatives, that they thought, well, everybody has like a little James Madison inside of him or her, and they just want the liberty to own property and to have freedom and live under a regime that protects these basic human rights and this sort of thing. And I just don't think it's true. I think that something like, if you look at the polling data from Afghanis themselves, something like 95% of people wanted the Taliban in charge, wanted Sharia law, wanted these things, and so it's kind of how do you, why are we imposing?
Yeah, we're bringing our democracy by completely ignoring the desires of people. This is the kind of completely narcissistic and sociopathic look at things that and even racist, I would say, from the Democratic side, because they know better what the people in Afghanistan want. You know, the Democrats and the neocons feel superior to the local people and try to instill their own views on life and religion, liberty and death and whatever else over the local people opinion.
Yeah, well, I think that it's the very misleading model that got planted in some people's heads after World War II, when we defeated Japan and Germany. And it wasn't just, by the way, the United States defeating them, but Russia too, right? Soviet Union. And in the zones that we controlled, like in Japan, the United States ended up controlling Japan under MacArthur. And MacArthur engaged in this kind of very forceful nation building. Like, we built Japanese society from the ground up to be a democratic society. And there's no way that anyone could do what MacArthur did back then, because it would all be perceived as very culturally insensitive and racist and so on, which maybe it was. But I mean, there are a lot of the words for things in Japanese, they're actually derived from English words, like toire is toilet. They didn't have a word for toilet before. And it's not that they were, you know, living in caves or something like that. They're just, their idea of toilet was like what it was in much of Europe before World War II, which was a hole in the floor, right, leading to the septic tank. And it's not, you know, saying anything negative. It's just like these ideas of what constitutes like affluence and being middle class, and it was pretty much brought into Japan by MacArthur and the U.S. military. And these idiot planners in Washington thought they could just do the same thing with any country. make Iraq in our image, make Afghanistan in our image. You know, they're just yearning to be free and have shopping malls
and wear miniskirts, because that's what democracy means. The less women wear, the more democracy there is. And that's, you know, the more freedom of sex and various relationships, that's what democracy has become to mean to the United States. Because if we really were cared about freedom of speech and true democracy, then Facebook, like Taliban said, look at your own Facebook, blocking your own president.
That's what,
and then stop lecturing us about democracy. So that's what I'm saying. Democracy has been all perverted about LGBTQ and miniskirts, as opposed to actual freedom of speech and freedom of having a business, or freedom of now the businesses were closed during COVID. So where is your democracy then? And right now, lockdowns, you can't go to a bar in New York City without a passport. Is that democracy?
But I think, you know, bringing this back to the market, I think that some of this sense that United States has like fallen in its influence is a very powerful negative push on the market. And I think it will be for a long time. I don't think we've really seen that happen, because there's all these horrible images coming out of Afghanistan. But has there been any, supposedly there's still like 10,000 Americans and other, a bunch of people from Europe and so on that are stuck in Afghanistan. They can't get out. And so if there's negative things that happen or whatever, then I think it'll start to have an impact on the market.
Right. And what does it even mean for geopolitics? We don't even know yet. What does it mean for Saudi Arabia? What does it mean for Iran? What does it mean for oil prices? Oil has been selling off for the last couple of days, 4 days in a row. But you know, with all of this that's going on in Afghanistan, we don't know how it's going to play out with Saudi Arabia. When Biden was asking them to, Biden begging Saudis to release more oil or to reduce the prices, to help us reduce the prices while banning our own oil exploration. It's like global warming only happens in America. It doesn't happen in Saudi Arabia. Somehow they extract the oil and that's okay. But in US, you know, you cannot do it. Instead, you extract it in Saudi Arabia and then transport it via the ocean and into the US versus the easy and cheap and clean pipeline in Keystone.
Right. And yeah, rather than trucking it across the country, you know, we could have been using a nice clean pipeline, right?
Right.
And it was a big deal when this colonial pipeline was shut down, and it was regarded as an act of terrorism. But when a handful of environmental groups shut down the Dakota pipeline, it's the right thing to do. So it's a really strange kind of set of inconsistencies. I don't understand.
Right. And like Victor is saying, as long as the market is woke, it keeps going up until the breaking point. And we don't know really where that breaking point is. At least we don't know yet.
I think it'll be, you know, my view, I mean, it's very similar to what happened. Okay, if we use the 1995 analogy, what I recall about the market going into 2000 was that there were all these negatives were known for years. I mean, they were known in 1998, 1999. Right. We had this pullback in 98, and then it bounced even higher. And we knew all the negatives. All of these things were out there. And we even knew about there was the bombing of the USS Cole in 2000. And by then the market had already topped out, but that was like a prelude to 9/11, which just months later happened. But we knew, well, there's something going on, that these radicals, they want to do more than just, you know, shake their fist in the streets, and they're going to take action. And we didn't take that seriously at all. But I think that's the type of thing that we're in a situation like that, where all the negatives are known, and we're just sort of sitting in wonderment at, like, well, how long can the market ignore this? Well, it will for a while, but then there'll be like this turning point where it's like when you see like a school of fish and they just suddenly turn. Oh, well, what triggered the turn? It was just something so slight that they all responded at the same time, and that's the type of thing that I expect to see in the market.
Well, like Afghanistan, where everybody knew how it's going to end for the 20 years. I mean, at least smart people knew how Afghanistan was going to end. Just look at the Russia in 1980s. And so everybody knew that Afghanistan is not ever going to be democratic, but we pretended for 20 years. And then on the turn of a dime, in a week and a half, the whole country fell back into Taliban, and the airport is crowded like the schools of fish with people trying to escape. It's a horrendous situation to see those people dropping off the planes like in 9/11 from the buildings, but right. The analogy is very similar. But yeah, like you said, we knew about this for a while, and when would the market react? We don't know. So that's why Victor is always saying the best strategy for most people is just to buy and hold, and I would say don't buy it all right now, right here, but buy in small chunks as
yeah, I think you know, and we haven't talked about crypto yet, but I'll you know.
But before we get to crypto, because 95 analogy, and we talked about innovation, let's talk for a minute about ARK and Cathy Wood, because Cathy Wood was in the news today with Michael Burry. Michael Burry apparently short a lot, well, has bought a lot of puts for ARK ETF fund, and Cathy Wood was defending herself today, saying that Michael Burry just doesn't understand innovation space as he bets against her. Well, I'm sure he understands the innovation, and I'm sure the main disagreement he has with Cathy is the valuation on that innovation, as always. It's not the point of understanding the innovation, but understanding the valuation of it. And she obviously is defending her position, and he is the opposite. So it's not the point of innovation, but what is the valuation is, and what is the market perception is.
I don't know. He's a short seller. I mean,
Yeah.
that's what he does. And I would just say that a short seller is, in a way, I mean, the difference between a short seller's price and a long's price, or a secular long's price, they're like, the short is like the bid, and a secular long is like the ask in a way. I mean, they're going to have, there's a spread between their ideal valuations of what something should be, what some new technology should be, and he's shorts almost by instinct. Now, I would point out that although he took this very bearish stance, not toward crypto, but toward Bitcoin, which is different than crypto, and even, I mean, the people that are Bitcoin maximalists would strain at that distinction. And I actually agree that Bitcoin, a lot of crypto follows it and moves with it, but it's not the same as a crypto market in general. And there are different cycles, and Ethereum is different than Bitcoin and so on. But he took this very negative stance toward Bitcoin, but he also made the point that he's not shorting it. He's not taking a position. That's not to say that he wouldn't, or that he can't, or doesn't look at it, but he said that he's not shorting it, although he took that bearish position. So I would say that he's a short seller. That's what he does well. And the one thing I would point out in the same interview that I saw with Cathy Wood, she pointed out that she had sold a lot of her China tech stocks back in February, which was very good timing, actually. That was a really good time to sell, and so we've seen, and that was well in advance of things like China cracking down on cryptocurrency mining and so on. So I think she actually had some pretty good timing, at least on some of these China tech stocks.
Right, and Michael Burry is much more often early than the market. Whether it was his mortgage bet or his short of Tesla, he was way early as well. So I don't know how long he's been short ARK, but ARK hasn't been moving in the last half a year. It was pretty much in the range, so it's not exactly.
It's it's rallied off its low, and it moves pretty. Let's look at the chart. That it's rallied off its low. I would say it's an ETF. It's not like a publicly run company. It's an ETF, and so what you're betting, there is like this short ARK ETF. I mean, it's almost like, and I kind of agree with Cathy Wood on this one point. It's like the people that are so eager to short this. It's like it's because this there was an article a few weeks ago on Bloomberg, like this Trump supporter who reads the Bible, and that she's beating Wall Street at their own game or something like that, and kind of posing her as being this so out of step with Upper East Side stereotype that manages a fund on Wall Street. When I know for a fact, I know quite a few money managers that live on Upper East Side, and they are pretty conservative. A lot of them are pretty conservative in their politics, and they're not, like what Bloomberg thinks it is. It's not what a media person thinks the typical Wall Street person is. It is a much more conservative group, and a lot more aligned with Cathy Wood's politics and philosophy, probably, than they are with the Bloomberg philosophy. But but anyway, the article was very negative about her, like personally, and I'm thinking,
Right. Nothing to-
like, yeah, like it's almost like a culture thing. Like she's, oh, who's this upstart kind of thing, and how dare she come along and make these, seasoned money managers look dumb by beating their performance or something. And when I read that, I thought, yeah, I like her even more now, for like coming in and beating their
Right, but market obviously doesn't care about anybody's politics or personal beliefs, gender. So I don't know why would Bloomberg bring that all up. I mean,
yeah, it was kind
simply
of
evaluations.
it was a pretty dumb article, and when I read it, I thought, okay, I like her even more now, and than I did, and I respect her even more now that they had to write this kind of little bit of a hit piece where and it's like totally unnecessary, and I think a lot of times when you see articles like this in the mainstream financial press, it's sort of fed to them by people that that the writer has access to, and they want to keep having access to, right?
Mhm.
And so they present it as like the result of some investigative journalism when it's really fed to them, and that happens in like foreign policy editorials. All these things, a lot of it is fed by somebody that the reporter is kind of fawningly trying to curry favor with that person, and so they present it as being fact. But I think this is going to be controversial no matter what, because this is kind of like the it's pure momentum, a pure momentum ETF, and momentum worked really nicely in 2000, but it sort of
Well,
not
her
worked so well.
portfolio is, that's why I brought it up. It's very similar to 95, where she has lots of companies in it with innovation promise. And
Right.
then as 2000 rolled in, or as now or next year will roll in, we'll see if her companies deliver on the promise or not, because neither her nor Michael Burry knows that. It's just the question of projection.
Right. Yeah, I think that it'll, so Burry is short Tesla. Did he say that he's going short ARK, or is he?
Yeah, he's short ARK now.
Okay.
Well, he didn't say anything. It was released in one of his reports, monthly.
13 F or whatever. Yeah. Okay. Well, yeah, he's short Tesla, but
Right.
it's like there's some of these I like Mike Burry, but some of these stocks, when you announce that you're short, you're asking for the Reddit mob to come after you and squeeze you, and so it depends, but it has to be both the market, and the timing has to be right for that to happen.
Right, that's what I was saying, that the ARK ETF it's at the same price it was trading in December, kind of like Tesla stock is. Their charts are very similar. So at some point, this range will break, whether the momentum continues or whether it will break down, and Michael Burry will be proven correct.
Yep. Well, the great thing about the market is that everybody can be right in the right time frame, right? So Michael Burry can be right in the near term, and then Cathy Wood can be right
Right?
in a little bit longer term, right? But I think so we're seeing what I it's the first time I'm seeing. Whoops, I just lost my Bitcoin here. We're seeing for the first time some a pullback for the first time in several weeks, and we really needed this, I think. In crypto, it's been pretty much a relentless rally, not so much in Bitcoin as it is in Ethereum and some others. but but it's been a really nice rally here over the last several weeks, from basically 30,000 or a little bit below up to went up to above 48,000, which is like a 40% rally pretty much, and so now it's back to just below 45,000, and so far it hasn't violated this. It's still on an uptrend, and very much like the stock market. But I could see this pull back a little bit more, and in fact retest this 42,000 level. And the same thing for Ethereum, I think. It's right now just a bit above 3,000, and it hasn't really made a serious retest of this 2,900 breakout, and I think it could go down to that level, and stay down there for a little while. It got a little ahead of itself. This was a pretty relentless 3-week rally, and there was a lot of good fundamentals behind that rally, but it's gotten ahead of itself in my view, and it will probably pull back a little bit more. But I do think that the given the news and where things are in terms of adoption, that wherever this pulls back, whether it's let's say it could go back to the 2,800 level, that might be a good place to make a trading long and hold it for a trade, like a swing type trade. So, or I mean, longer term position too. But I think, for the traders, it could be a good swing trade to buy, like in the 2,800, 2,900 level.
Well, interesting in the crypto space today that Neil Kashkari was speaking.
Yeah.
That cryptocurrency is 95% fraud, hype, noise, and confusion.
Well, it's like yet another person who's deeply embedded in the establishment.
Exactly.
A shot at it. It almost makes it makes the case for it even more, in my view.
Right.
So, I mean, they never give examples of where what actually constitutes the fraud. That, well, there was somebody that whatever, it was some kind of ransom or something like that, ransomware, but it could be done with dollars, or it could be done, with some other vehicle, and it's just I think a deliberate attempt to mine something that threatens an established interest.
Well, so I would say to that, if it's 95% fraud, why don't you address it? If he's so sure that 95% of crypto is fraud, why doesn't he stop it or call SEC and do something?
Right.
Go in front of Congress, present the fraud, stop the fraud. We don't want to defraud the public, but just
I think
95% fraud and do nothing. Well,
if you look at the trading volume or whatever, most of it, about half of it or 2/3, half to 2/3, something like that, slightly more than half, is on an exchange like a Coinbase or Gemini or Kraken. And so is that fraudulent? That's a little bit over half of the transaction volume. And then what's happening online, a lot of that could be like decentralized finance, or people buying JPEGs, basically, as they say. And it may be foolish, and even like buying Beanie Babies or something like that in the late 90s. But I mean, did anybody claim that buying Beanie Babies was fraudulent? No, it was just some mania of the moment, or something that was a bit foolish, but it wasn't fraudulent. So, but I think that most of the people that are involved in the crypto space where there is fraud, they would be happy to see it shut down. Why let something good be smeared by fraudulent activity? If that's what's happening. I'd like to see it get shut down.
Right.
Whenever, like for example, I used a platform that's called several years ago called Super Rare, and it's a platform for selling NFTs by artists, and these are legitimate fine artists who have decided to sell their art online, and it's been around for 4 years or so quite a while. And I bought something on there for cheap, let's say back in 2017, and I got a small airdrop of their tokens today for being a customer in the past. But my immediate thought when I got this offer, like claim your airdrop in my email, was, oh, this has to be fraudulent. I mean, is somebody trying to trick me into giving them my keys or something like that? So my first thought was that it was a scam. And it was only after I, checked online and went to their Discord and so on that I found out, no, this is legitimate. So there definitely is, there is a lot of fraud, but it's, and I would love to see that type of fraud where it's someone trying to scam people. I'd love to see that shut down. Not the super rares who want to reward their customers and build a community by giving away a piece of their company. But I'd love to see the scammers who want to trick me shut down, put in jail.
Yeah. All right, that's it for me.
Me too. So, all right, well, we'll talk on Friday. Thank you.